Let's get some insights in the news shaping the markets. For that, we welcome in Mish Director of Trader Education and Research at MarketGauge.com. Good to see you, Mish. Obviously, we had so much excitement surrounding tech. We had new highs. Last week where we saw new highs for stocks overall for the S&P and the Dow, but today's so different. Just tacking on to yesterday's losses after that Fitch downgrade. What do you think is happening here? Are we rolling over, or is this a pause?
Well, at this point, though, there's a few things I like to look at. One is the risk factors and their basic ratios of, like, let's say, how the long bonds are performing against the S&P 500, how gold is performing against the S&P 500, and how the junk bonds are performing against the long bonds. And all of those still say risk on. So at this point, unless that changes, we have to look at this more as a correction. Of course, that was stimulated by the debt downgrade. And so really, I think we have to keep an eye out on that kind of caution, even though it's been sort of poo-pooed by the government that, oh, it doesn't really matter, don't worry about it. You know, I woke up this morning thinking about the Wizard of Oz, pay no attention to that man behind the curtain. I'm not so sure if that's the case. Just look at the yields. So right now, I would look for more correction, particularly though I'm watching the small caps and retail because they're holding up. Well, the second thing we look at, which is the July 6-month calendar range, they're above while NASDAQ and SPY is below. Interesting.
It's interesting because you mentioned retail and how the consumer is really showing some resiliency here. Even with higher credit card rates, they're using a lot of buy now, pay later. I don't know if that will actually catch up with them because a lot of folks are even dipping into savings. At the same time, earnings season has looked pretty good. For example, later today we'll be talking about Amazon and Apple. What are your thoughts on names like that, for example, that have run up and some of which have been hitting new highs, the Magnificent Seven?
Well, I don't think that you can really get bearish in those names. All you can say is hopefully they go down for better buy opportunities. Clearly, the future is been set this year. We saw what is going to happen. AI and also all of the virtual reality and cloud computing, all of these things are here to stay. And I think that Microsoft and Amazon, which is really trying to expand now into more food and also pharmaceuticals, I'm not worried about those stocks. Interestingly enough, our models did not get us into either one of those, but we're in Meta, we're in NVIDIA, and so we've been come off, but it's still strong. So I would say for tonight, if we get any kind of down move, maybe Apple more than Amazon, that's probably going to be an opportunity to get in if you're not already in at lower levels.
Right, understood. I want to get to some of the names that you do like. For example, you mentioned oil, but you like oil, but with some specificity. Tell me about that.
Well, I mean, there's a couple of things about oil that are really, I think, merit some caution here overall in terms of the party for the consumer that they've had in spite of everything. And that was all these recent numbers that have come out, PCE, CPI, PPI, all were based on oil prices. And we can see now oil over $80 a barrel. You have to wonder, higher yields and higher inflation, what happens to the consumer going forward. So that's why we like the oil names, but we're looking at Exxon in particular because of what's also happening is this huge manufacturing push in the U.S. along with the EV charging stations. So we're looking at all these companies support that type of infrastructure. And Exxon is actually one of the names that came up in terms of being able to actually establish some presence in EV charging. So that's where we're looking at. We're looking at names like Dow Chemical, steel, Chemours, even aluminum. All of these names right now look interesting to us to support the EV. So I would be looking at anything, whether it's from infrastructure to signage to even the nuts and bolts that are made. All of that stuff could actually see a nice pop.
Yeah, really interesting. You even mentioned Tesla. Just could you go over that a little bit? Because I know there's a lot of Tesla fans out there. They want to know what you're thinking.
Well, again, we're long Tesla, so there's that. And Tesla's sort of holding that 250 level, which I think is an important level. But again, let's look at Tesla. There's the car, and they've come down a lot in their price over the last year. But also there's all the software and support that they're giving to infrastructure as well in terms of EV charging stations. So I think that the picture for Tesla, unless we go into some major liquidity crisis, is still very, very good there too. So 250 would be a nice jumping off point, and it's trading higher as we speak.
Okay, and then just last but not least, I saw you have Kroger and Hog, Harley Davidson. That's a fun one.
It is. Well, you know, Nicole, some of it is based on the boots on the ground, I like to say, right? So I went by the Harley Davidson dealership in Santa Fe on Saturday, and I was blown away how many people were out there. And so if you're just looking at the fact that people might be switching more towards motorcycles again, there was a period where they weren't. You know, the Hog is still definitely the kingpin, and at current levels, it looks relatively attractive. And yeah, you look at a nice shot of the motorcycles there. Yeah, I think that that's another stock worth watching here as well.
All right, Mish Schneider, great to see you of MarketGauge.com. Thank you, Mish.